All right, let's get right into it. We're breaking down the latest earnings call from Teleflex, ticker TFX, for the second quarter of 2025. And what a story it is. You've got a really solid report clashing with a pretty tough market right now.
Okay, so here's the game plan for this briefing. First, we'll hit those big headline numbers, the beat. Then we're going to peek behind the curtain to see what's really going on. After that, we'll get into the big strategic shuffle they've got in the works, how investors are taking it, and then, of course, we'll wrap it all up with our final call on the stock.
So, let's kick things off. Simply put, Teleflex knocked it out of the park this quarter. They came in well ahead of what Wall Street was expecting, not just on earnings, but on revenue too. A clean sweep.
So for the bottom line, the magic number was $3.73 for adjusted earnings per share, or EPS.
Now you might be thinking, is that good? Well, yeah, it's really good. That number blew past what analysts were expecting by about 11%. I mean, that's not just squeaking by, that is a huge, decisive beat.
And the good news didn't stop there. Over on the revenue side, the company pulled in $780.9 million for the quarter.
And just like with earnings, this number was way ahead of the consensus, which was sitting around $772 million. So you're seeing real strength across the board here, top and bottom line.
Okay, but here's the thing. The beats are great, but they're not even the biggest part of the story. Where it gets really interesting is when we dig a little deeper, because the real bombshell this quarter was the company's new guidance for the rest of the year. Yeah, check this out. Management didn't just nudge their guidance up, they raised it substantially. We're talking a big jump in their outlook for both revenue growth and EPS. This is all thanks to a really important acquisition they made, plus just better performance overall. Honestly, this is the kind of big reset investors have been waiting for. Now, it wasn't all sunshine and roses. The quarter was really a tale of two different businesses. On one hand, you had their interventional segment, which was on fire, just incredible strength. But on the other hand, their UroLift business and the OEM segment, that's where they make parts for other companies, well, those parts of the business are still really struggling. And this is where we get to the really big picture stuff. Management isn't just sitting back and managing the day-to-day. No, they are making some massive moves to completely reshape the company.
First up, they officially closed the deal to buy BIOTRONIK's vascular intervention business. This is a huge deal for them. It's all about beefing up their growth. We're talking an extra $204 million in revenue just in the second half of this year. Plus, it gives them a much bigger footprint in the cath-lab space, which is a really high-growth area.
Okay, so while they're buying new stuff, they're also getting rid of some other parts of the business. They're running a parallel plan for those slower growth segments we mentioned, the OEM and urology businesses. The idea is to either spin them off into a new company or just sell them outright. The goal? Unlock value for shareholders by separating the slow growers from the fast growers.
So let's recap. You've got a big beat on earnings, a massive guidance raise, and these bold strategic moves. You'd think the stock would have just rocketed up, right? Well, the market's reaction was, let's just say, a bit more complicated than that. At first, it looked like a moonshot. The stock jumped almost 16% before the market even opened. But then reality set in. By the end of the day, that huge gain had fizzled out to just under 5%. And when you remember this stock has been hammered over the last year, down over 47%, that fade really tells you something.
And this really gets to the heart of the battle going on here. On one side, you have all this great news from Teleflex itself, but it's fighting a two-front war against one, a weak healthcare sector overall, and two, just how tricky it's going to be to pull all this off. I mean, integrating a huge new business while also trying to ditch another one? That's a lot to juggle.
All right, so let's put it all together. What does this mean for the stock going forward? Here's our call on Teleflex.
For anyone looking at this stock, it really boils down to one simple question. Is this quarter the start of a real turnaround, or is it just a flash in the pan?
Our verdict? We're initiating with an outperform rating. Here's why. You've got the huge guidance raise, you've got a smart plan to unlock value, and you've got a great acquisition. It all adds up to a really powerful self-help story. We think Teleflex has what it takes to buck the trend and do better than its peers, even if the whole sector is struggling.
And now for our outrageous but plausible trade idea. You could think about a pair trade here. Go long on Teleflex stock, but at the same time short the big healthcare sector ETF, which trades under the ticker XLV. The whole point of a trade like this is to bet on Teleflex's specific turnaround story while protecting yourself from the general funk that the rest of the healthcare sector seems to be in.
And of course, a quick reminder, this is not financial advice.